Markets may look calm, but a single spark, whether it's a breaking geopolitical headline or a surprise policy shift, could set them alight. I'm Johanna Bota, and here to discuss the week ahead is StoneX's head of global content, John Kicklighter. Welcome back, John. Let's start with the general market conditions that we should expect to deal with next week, especially given the recent geopolitical developments in the last 12 hours.
Yeah, I would say prior to what we had in terms of Israel preemptively attacking Iran, it seemed like we were heading towards that very restrained, very seasonally appropriate drive down in both volatility and liquidity. While you have benchmarks like the FTSE 100 reaching record highs and the US indices very close to doing the same. But that same quiet, I kind of I proselytize about this. That quiet can also create a pinch in liquidity with the proper catalyst giving us dramatic movement. It might not last, it might not turn into trends, but thin liquidity can turn into problems for active traders or investors who are very late to the game as it starts climbing back to these record highs. So I would say keep very aware of these potent potential catalysts. And it's not just the situation in the Middle East. We still have not resolved everything with the US China trade situation, although it seems to have improved, or at least the leaders have suggested it's improved. You have the uncertainties of growth. We've had significant downgrades in growth. It's a little slower of a theme. And then you have what is our top event risk next week, which is very potent in terms of monetary policy. So a lot can come out of the blue, a lot can come from the calendar, and most of the potential just generally comes from the headlines. So I would say not a situation in which I would get comfortable with what the norms usually suggest for this time of year.
So then, which themes could really shatter this calm for bulls or bears?
Sure. So of the many themes that we are that are competing for our attention, there is certainly an uneven potency in terms of what's impacting the markets now. I would say that the trade wars become a little bit of old hat. So the U.S.-China negotiations are ongoing. A significant downgrade, what seems to be, we don't have all the details, but a significant downgrade in the tariffs that the U.S. is implementing on China and vice versa, and they're opening up on their rare earths. But it still can certainly fall apart. But improve or fall apart, we know what the band of uncertainty is. We know how good it can get. It's not gonna get to zero. So the opening up of the upper end is not going to be there for enthusiasm. It can get worse, but there are limitations on how quickly it can get worse now because of the lawsuits brought against the White House on how it can conduct tariff activity. So that doesn't have the potency, the full grain potential that we've seen it in the past. So I would focus more on something that's a little more imminent threat with a greater diversity of potential outcome. And for that, obviously, the situation in the Middle East. That is certainly not uncommon. However, direct tensions between Iran and Israel is something that usually creates the level of volatility that we have seen, for example, in crude oil soaring higher. But it's very interesting that it is not unfamiliar territory because you can see how restrained benchmarks of risk like global indices are treating this news. So I wouldn't say that we're completely immune to it. And we certainly are not. If it escalates, it will impact the rest of the capital markets, financial markets around the world. But for now, skepticism is still holding. Definitely watch over the weekend. But the theme that I think is most potent, because we are not going to be able to avoid it, that its outcomes, regardless of which way they skew, are going to be market moving in some form or fashion. That's monetary policy, obviously anchored next week by the FOMC rate decision. But it's not the FOMC that is the most active; it's the most inactive, which causes the problems. And then you have a bunch of other central banks who have been active, but the questions are, what is their next move? So that's the theme that will probably generate most traction with the headlines that we expect.
Let's look at the week ahead. What's the top event risk that could light up these themes or shift the market's focus entirely?
Sure. On Monday, there is, I think, a more concentrated view of event risk. It gets us away from the themes, and you have to be careful because if a theme like trade wars is on the back burner, even if it's the most potent update, if there's anticipation from the next day of something that is even more thematically influential, like a central bank rate decision, it can curb the market's impact. So I say that as a caveat. But Monday, and talking trade wars, China's May data is on tap. So we're going to get a range of economic activity that really reflects how the country performed through the previous month. It's going to be very important for its overall health. We've seen a lot of downgrade of growth forecasts for the United States this past week. We want to see how the Chinese economy is performing. It's the second largest in the world, and how it performs has a lot of influence, not just within its own market space, but also the carryover for trade partners that have a lot of access and influence in their financial ecosystem. So I would say that, and perhaps now with the Middle East tensions, the OPEC monthly meeting. I think that's going to be very important. Getting into Tuesday, that's when we start getting into monetary policy. Now, the Bank of Japan is on for the morning around 3 GMT. They are not expected to move, but they have been on the very interesting tightening cycle because they came from zero. How they continue to thwart inflation. They have demographic problems that create an economic uncertainty. They have a global monetary policy average that they're completely diverting from, and it creates a great imbalance. So seeing how they operate for ballast or counterbalance for the rest of the world's major central banks going to be very insightful and I think very interesting. You also have U.S. retail sales, import export inflation figures, industrial production, housing market index, and AHB. That's going to be a very good overview of some of the key elements of global macro interest for the United States, but it's just not going to register in any kind of meaningful way with the FOMC the next day. So I would say UK CPI, Japanese trade balance, those are important on Wednesday, but there's just no getting around the fact that everyone's going to be fixated on what the FOMC does. Now, this is a very interesting FOMC because it's one of the quarterly events. So every other event from the FOMC's eight is a quarterly event. And with that quarterly event for the past years, it has come with a summary of economic projections. So an updated forecast for growth, inflation, employment, and very importantly, interest rate, their interest rate expectations. This is going to be what I think the market fixates on most because the Fed is very unlikely to change its benchmark now because of the uncertainties around inflation and carryover costs for tariffs. And that is the contention between Chairman Powell and President Trump. We've heard him this past week really lean into Powell, calling him a numbskull, very unfavorable considerations, vague threats that he could still replace him or fire him, which legally I don't think is there, but it won't stop him necessarily from trying. But this is where we're going to get a lot more interest and drama in the press conference that follows half an hour after the rate decision from Powell. We'll see if there is any kind of potential that he is looking to step down to get out from under the intense scrutiny of the president. It doesn't seem that that's the case, but if it does show up, I wouldn't count it out as a possibility because it could have dramatic impact on capital markets and the US dollar. Dollar decline, big rally from equities if they see the potential for stimulus through monetary policy. After that, Thursday is more rate decisions. You have the Swiss National Bank rate decision. You have the Bank of England. The S&B is expected to cut by 25 basis points. Bank of England is not expected to change, but why is going to be very important there. And then on Friday, you also have another rate decision. You have the Chinese central bank, the People's Bank of China, their 1 year, 5 year loan prime rate. So it's a very big, comprehensive how is monetary policy reacting to growth forecasts, inflation forecasts, and trade uncertainties. And that is a really important rudder. And for many, that's the expectation of stimulus that they are going to be focused on.
Thank you, John. And thank you for watching. For more financial content like this, please like and subscribe to our channel.